Testing, testing, testing. JB here, December 1st, 2023. Welcome to December. It's been a couple weeks since I've been on audio, but figured I'd talk about some of the names that I'm looking to trade into the end of the year. Some thoughts. I mean, obviously, we have the Fed in 2 weeks, and we have the Santa Claus rally. People always are looking for something to write about, and I'm sure the headlines around some of these FinTwit sites and these outlets are going to talk CNBC. They're going to start talking about the Santa Claus rally as a historically strong performing time frame, usually right before, right around the Christmas holiday, all the way till about January 2nd, January 3rd. And it's multiple factors, repositioning, people looking for some bargains that have probably oversold, some tax loss selling, and then people take advantage of that. So I think there's going to be some opportunities here. The market. I was talking about 460 on the SPY on the watch list this week, and then we had some chop, and some of the chop was kind of frustrating. So yesterday, market we were in the red for most of the day. Then we had the last 30-minute rally, last 30 minutes of the session to close at highs, and then today we're chopping around, and all of a sudden we're just starting to melt higher, and we're right here at 460. The people continue to put money to work. It's certainly possible. So, first I'll talk about Trupanion. And, if you haven't followed the chat room or haven't listened to some of my comments around Trupanion over the years, it was one of my top 5 stocks. I have to go back. The stock maybe was in the teens or lower 20s. If there's not one segment, but if there's an industry that is pretty much, I wouldn't call it recession proof, but most folks and a lot of people would probably do more for their pet than they do for their children. I mean, that's horrible to say. I'm not saying that's what happens, but there's a lot of folks out there who have pets and they treat them, they have Instagram pages for them, Facebook pages, they dress them up. They do all these things, which is great because pets give unconditional love and people love them back. With that means that people are going to take care of them. Obviously, they got to feed them, but then there's healthcare, and healthcare when it comes to pets is expensive. And I've talked about these situations on rants for the last couple of years when it comes to Trupanion. But when you go to a vet and your dog has maybe a stomach issue, the first thing they do is they do X-rays, $200-$300. Then they want to do blood work, was $200-$300, and you go on and on. Maybe they want to keep them overnight, him or her. Now you start looking at $1,000-$1,500, and that's probably the starting point for some kind of now just to find out what is wrong with your pet, and then they're going to put them on drugs. I have stories over the years, but they wanted to put I think it was antiviral, some kind of my dog. They thought he had a tick bite, so he tested positive for Lyme disease. And all of a sudden, it's 200 pills of some kind of antibiotic. And if you look, it was like $2 a pill. But then you go online to Chewy, and it's $30 for 200 pills, as opposed to $400. But anyway, needless to say, I think there's a huge opportunity, similar to human healthcare, where insurers are kind of subsidizing the huge costs that go involved to getting treatment. But that's where Trupanion comes in. So my bull case on Trupanion back in the day was that there's a huge penetration of insured pets abroad, especially in Europe. So I think in the UK, some of these other France, I think France only 7%, but 25% of all pets in the UK are under some kind of insurance plan, some veterinary insurance plan. So here's Trupanion, and in the US, that penetration is only 1% to 2%. So all they have to do is move the bar 3, 4, 5%, and you're talking about a huge opportunity. So you take a look back in the day when I used to trade Trupanion, it traded 15 or 20 times revenues. I think it did like $200 million or $300 million a year in revenues, and it was a $4 billion market cap. Now you take a look, and it's come quite a bit off its highs, and here it is trading less than 1 times revenues. It does 1.1 billion in revenues, and it's a $1 billion market cap. I'm not saying that means it's undervalued, but I think there's an opportunity here. And if you take a look, and I've talked about this too, and I posted on Twitter a couple days ago, there's the same folks, and I used to be bullish Tesla long time ago, and I would go and post bullish things on Tesla, and you would have a lot of these folks out there bashing me to the point where I stopped talking about Tesla because it was the same group. I used a bad analogy to describe them, but it seems they all were not colluding, but together to try and make sure the Tesla Q crowd won over, right? That Tesla would go bankrupt, they hate Elon Musk, or whatever the case is. Those same folks were on Trupanion. Anytime I'd post something on Trupanion a couple years ago, those same folks would come at me saying it's garbage, it's a scam, it's a fraud. State Attorney General in Minnesota, all these other states are coming after them. They're doing insurance fraud. And then you take a look and it's got a 40% short interest, which is pretty remarkable. So Charlie Grant, who writes for the Wall Street Journal, his dad writes the Grant Observer. Again, I hate to have like these conspiracy stories or what have you, but he's been negative Tesla for many, 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 many years. I remember they got a new editor at the Wall Street Journal. They sent an email, send us your feedback. I sent a whole huge email to the editor of the Wall Street Journal. He said he was going to respond to everybody, didn't respond to me. So anyway, what happens? There's Charlie Grant writing negative articles on Trupanion because that same group of Tesla shorts got probably sent emails and texts to him, and they come out and they did it on Trupanion. They're still there doing it. So I'm not saying, hey, maybe I'm wrong, right? But the insurance industry as a whole, and yeah, you have to. Sorry, 1 second, folks. The insurance industry as a whole in the U.S. it's very regulated, right? You have to have a certain amount of capital. There's regulations, laws that you have to follow. So what that does is it opens these insurers to scrutiny, and especially Trupanion, where if you have a lot of people who are short the name and are going to make money based on the possibility that the stock falls, they're going to be sending emails to the Attorney General, to all these other folks to say, hey, take a look at Trupanion. So what happens? So the state attorney, I think it was Oregon, Minnesota, they start doing these investigations into Trupanion, and it creates these great headlines where, especially if you're an investor in a company, you don't want to hold a company that has a potential liability for some of these investigations, so on and so forth. So that was some of it. And I think, take a look. I think it's the new short interest came out. It's a 40% short interest. I think it heads into the mid-30s in the coming weeks, maybe even to 40 into the start of the year. I think it's a great opportunity. I think it's 60 straight quarters of 20% year-over-year revenue growth. So it's a remarkable growth story. Obviously, if you take a look at the risk involved in an insurer like Trupanion, who pretty much pays out all their claims by themselves, it's that if every single pet under their plan, every member of that subscribe to their insurance plan, if they all submitted claims at the same time, obviously there's some risk of some liquidity issues. Whether, I wouldn't say bankruptcy, but who knows? They would have to do offerings, things like that. But that's come with every insurer over the years. Tell me any other of these insurers, they all had to start at some point, and I think they're in a niche place where it's, again, pets are almost more beloved than some family members. So I just think it's a great opportunity. They've had some partnerships. They have it with Chewy. I think State Farm also lists them on their website. And I think just, again, if they just notch it up to 3, 4, 5% penetration in the U.S., it's a $15 billion company. So we'll have to see how this all plays out. I really like them for upside. So that's the Trupanion story. Have December and January strikes. There's a lot of folks, and again, on Twitter, the same folks who have been short Tesla, who are short Trupanion, they're all the same people, and it's just ironic how that all works out. And maybe they have enough cash, enough leverage that to continue to short it into the ground, and they make money. Good for them. I just think they have the story wrong. And if you take a look, trades at it's historically inexpensive in regards to its previous valuations and the market opportunity that's possible. So that's Trupanion. Not going to talk too much about that. I added Zillow. I put it on the watch list this morning. You talked about the Santa Claus rally. There's going to be some names that I think are going to will outperform, especially since they've underperformed for most of the year. Zillow's a little different because I think it's up, well, not today because it's up nearly 5%, but I think it was up 27% year to date coming into today, and it's way off its August highs. And I think it was 60 and change into August. Take a look at yields, where they dropped the most in 5 years in November. I'm not saying that that's going to be a boon for housing sales, but the supply situation with housing still remains. So the lack of supply, you still have the demand, and then as the market starts pricing in the possibility of rate cuts coming into May, you have to think that's going to kind of get the wheel turning. So folks, when you buy a house and they're buying it on a mortgage, you don't have to get the 7% rate right now. You can, but you can get it, an ARM. You can get an adjustable rate mortgage, and with the hopes, well, I wouldn't say the hopes, but that you think the rate's going to decline over the next couple of years. And if that's what's going to happen, it's a great time to get a house, right? And home values are probably going to stay the same, if not rise, and then you're going to be able to readjust your interest rate in the coming years, and maybe beat out some other folks who might be trying to rush to get into the market as rates start to decline. So everybody's painting a picture of this graveyard for the housing market. I don't think that's the case. It hasn't been. So I think you take a look at Zillow, and Zillow is a great story. One of those names, I don't know, it was 2013. I don't think it was one of my top 5 stocks, but I traded that on and off. They had the split, they had the acquisition of Trulia, and housing is a huge driver for the U.S. economy, and here's the company that's front and center to be able to take advantage of people looking for homes, agents looking to sell, advertising, so on and so forth. So Zillow is a great story, and take a look at the overhead too. I mean, the margins, they have their premium agent sales program. They have all this stuff that I think bodes well. And similar why I look at Redfin, because Redfin, at some point someone's going to disrupt this real estate sector in regards to the transaction fees, all the costs associated to buying and selling a house. It's mind-boggling that people. It seems like everybody's hand is in someone else's pocket when you're going to buy or sell a house, because everyone wants a piece. The title company, the surveyor, the inspection. There's all these different things that go into it. At some point they'll figure it out, and that's what's good about having publicly traded companies. That will kind of figure out the supply demand on that, and hopefully they'll figure that out at some point and make it a more seamless process. But Redfin's another great story. Redfin was $4 at the start of the year, and here it is up near $7. As much as I would like to add some calls there, I'll just hold on to Zillow. So that was kind of the thought process there on Zillow. Not going to talk much about Fiverr here at $27. A great story. I mean, I've talked about Fiverr. The economy is changing from employment to a gig economy. Fiverr's front and center, especially when you look at the services they provide, which is more online, creating content, creating whether it's the websites or images or troubleshooting things for folks. And then you have the other side of it, which is the AI side. And people thought that because of things like ChatGPT and all these other platforms, that Fiverr was going to suffer some competitive worries, that they were going to suffer revenue loss, because instead of using one of their providers, one of their gigs to get you a service, you just go to ChatGPT and type it in and it solves your problem. But I think on the flip side, it opens a whole nother addressable market where people are going to try and look to take advantage of what's going on with AI. And I've posted this many times on Twitter. There's parabolic rise in the amount of services that they offer in regards to AI, and I think that's just going to be the next line of growth for Fiverr. So thought process there on Fiverr. I'm trying to think of the other ones, but anyway. So use another name. Again, similar story to Trupanion, and they're not the same folks on short U that are short Trupanion, but it's a similar story where you have these hit pieces come out. Bloomberg came out with at least 3 hit pieces on Clear Secure, which ticker is YOU, where they post about like one person getting through security at an airport, and it's this big hit piece that, oh my gosh, their product is unsafe. The TSA is going to remove them from airports, which hasn't been the case. And the company is growing, I think it's upwards of 40% on a year-over-year basis. They have fundamentally sound, huge cash hoard. They have a dividend, stock buyback. Just a great story. And if you look at the future of security, it could be stadiums, concerts. Obviously, it starts with the airports for you, but they're going to branch that out. And at some point, it's going to be the, I'm not going to use the John Hancock or DocuSign analogy, but they probably are going to be what you expect when you go to an event, to make sure that not only, are you the person that has the ticket, or are you the person who's supposed to be on this flight. I think it's just going to branch out from there. But it's a great story. So another one, huge short interest. Stock is way off its highs. It's just shocking to me. Just a huge growth story that I can't see. If you do research, not many stocks out there that are growing at this huge clip. They keep adding more airports. I've talked about the NFL has a stake in you. To me, it's just a great opportunity, or at least, especially where it is now. I think it trades 25 plus into the end of the year, and then hopefully back over 30. Excuse me. So that was you. I'm trying to think of the other names I put on here. PayPal, Square. I've talked about these names for quite some time. Finally got back into PayPal. It's been a long time since I traded that. Thanks, Easy Trader, for kind of posting that. Another name that's underperformed, Square and PayPal. They're disrupting transactions as we know it. Stocks way off the highs. Let's see. I didn't even see MasterCard and Visa. Oh boy. Still, even if I just need a couple percent for it to get into the 60s, and then I think the calls come back to life. I think it trades above 60, and also above 65 into the end of the year. Probably not going to add anything there on PayPal, but again, I think that's another story that's going to try and outperform into the end of the year. AVAV reports earnings Tuesday after the close. If unless you've been somewhere on an island far, far away, drones are a big story now, especially with the situation in Ukraine. Now you have what's going on in the Middle East. AVAV has always been kind of the name you kind of look for in regards to unmanned vehicles, right? So, we'll call it 100% the future of warfare, but that's where some of these things are going. Huge orders already, and back when the situation in Ukraine just started, there were orders placed for AVAV, and now you just have to think some of these other countries are going to try and be proactive as opposed to reactive. So you have to think some of those orders come in. The company, I don't even know, it's right here, multi-year highs. 142 is the all-time high on AVAV, but let's see, it's 1.5 billion? Let's see what it is. I haven't looked in a couple days. Oh, whoa, it's $3.6 billion market cap. So it trades 7 times sales, does nearly $600 million in revenues, but they have over a $500 million backlog, meaning not only do they do $600 million in revenues, but if they just caught up in one day, they would be doing $1.1 billion in revenues. So really, in essence, it trades 3 times revenues. But just a great story. They're going to report earnings Tuesday. Another divisive name. So if you go look, Spruce Point Capital's been short that name before. All these other folks who try and find little chinks in the armor. So with AVAV, it's the product. You can go Google, and AVAV there's YouTube videos of their drone. It looks like, I don't know if it was manufactured or what have you, but it looks like someone just slapped a remote control inside one of these little airplanes. And it's kind of comical. I mean, if it's true, it'd be a big, be an issue. But you would think that a company of that size, who's doing that kind of revenue, someone would have, you would think that's not possible, right? I mean, I guess anything's possible. But love the story. I just don't want to be in a situation on Tuesday after the close, they report earnings, there's some kind of miss or inline report, maybe they lower guidance. expectations probably high considering what's going on with the geopolitical situations in the Middle East and Europe. So lock some of my calls in. Hopefully it gets over 140 on Monday or Tuesday, and then I can at least lock a few more in to ride free, and then I'll probably ride the rest. Because if it's a big beat and raise, it's probably 160, if not above. So that's that. That's AVAV, Fiverr, Trupanion, Roku. Gosh, again, another one of those names, Roku. I was back right after that. I think it IPO'd in October of, 2016. Stock was $18 or so, and then they reported their second quarter of earnings, a huge beat, and the stock went from like 16 into the mid 20s. And then the more I looked at it, I said, "Wow, this Roku's not just a hardware company; it's a platform. It's going to be a service at some point." So everybody's still got they look at just the hardware side of the business with Roku. So the sticks or the little box that attaches to the TV. Then they look at the competitive situation. You have, of course, all the cable providers across the country are a competitor. Then you have, obviously, you have Google. Then you have the Amazon Fire Stick. I don't know if anybody uses the Fire Stick anymore. But there was a lot of competitive concerns. But then here's Roku. And, not only have they been able to transform from a hardware business to a software or platform monetization business, but they have their own channel now. They've been inking deals, and I'm not saying it goes back to its highs anytime soon, but I think it's a great opportunity. So anytime you see me get calls on Roku, that's kind of my thought process. So when you go from being a hardware company to a software side or just a service side, your margins go up incrementally. And I think I'll have to go look at their last earnings. I don't know the exact numbers, but I think it was like 80% margins for their services, and it's only like 20%, if not lower, on the hardware side, because most times they just give the hardware away. But now their platform is pretty much built into a lot of these TVs. So just think it's, I've used this analogy before. It's the platform to rule them all. So they're taking, they're content neutral, so they don't have any affiliations with the Amazon, the Googles, the Netflix, the HBO Max, the Peacock. They're content neutral. There's no, for example, if you're on YouTube TV, it's going to be hard for YouTube TV to get Amazon Prime on the YouTube TV platform, because those two, obviously, they're not content neutral, right? Amazon wants their folks to go onto their service, their Amazon Video service, and the other flip side is Google doesn't want to advertise Amazon's side. But then there's Roku, and they're neutral in this argument. So not saying it's going straight to the moon, but I'll continue to look for opportunities to play for upside. I love the Roku story. And some of the reasons I got, there was an upgrade, but it seems like some of these names run into the end of the year, and that's why I'm looking for some other names to trade for upside. So that's Roku, Trupanion, Zillow's hitting highs right now. Oh, VKTX, right? So Viking Therapeutics. So this morning, not this morning, I'm sure the article was penned last night, but then this morning it came out on Barron's talking about how to, the headline, worried about a weight loss stock bubble? Here are some alternatives. And there's Viking listed in the middle of the article as they called it a pipsqueak. Because, I've talked about this many times in regards to the GLP-1 market, but NVO and LLY, supposedly it's a $100 billion market opportunity just in 2030. And VKTX, which is only, I have to look up the market cap here. Are they I'll take my guess. I would assume they're like 1.6 right now. Let's see. Did I already talk about? So VKTX is a $1.29 billion company, but then you look at the market caps of MVO and LOY, and a majority of their hundreds of billions of market cap or valuation that has been added over the last 12 to 18 months is just based on GLP-1. So if VKTX comes out with an oral solution that is at least in line with LOY and NVO, you have to think it's substantially higher. It trades much higher than where it is. They also mentioned the NASH story, and some of the reason VKTX was on my radar was NASH and Intercept, which was acquired this year, Madrigal, MDGL. Those names were supposed to be the first drugs to come out to officially treat NASH. I think it was in the last 60 years. There used to be some drug out, I think it was 60 years ago. But supposedly 25% of the American population has the possibility of some fatty liver. And then at some point that's going to turn into cirrhosis. And people always associate cirrhosis with alcohol, right? If you drink a lot, your liver's going to harden up. It's going to be bad stuff. But supposedly this NASH was the next big market opportunity. All these people are afflicted with it, and it needs to be some kind of solution. But lo and behold, these GLP-1 drugs are starting to show the reduction in fatty liver after you take them. And not only that, they're removing some of these other possible afflictions, cardiovascular, and diabetes, which obviously was these drugs wouldn't exist right now if the first solution wasn't for diabetes. And then these companies said, oh, wow, people actually lose weight with them, had to do more studies, things like that. But VKTX, I was hoping it was going to trade over and close over 13. It's right here at 1270. Great story into next year. Once I think it's January, February, they're going to release their oral data for GLP-1. Right now, it's injections. Actually, is there one? I think there's one oral solution. But, 1.3 billion. Why doesn't someone just do this as a pocket acquisition? Especially since the early data looks great for VKTX. And so, anyway, those kind of my thought process. Why you see me add some of these positions. It leads me right into Weight Watchers, which has been a frustrating stock. $13 in October, pretty much cut in half. No news, no catalyst. Now we're getting into the end of the year. And what does that mean? New Year's resolutions. People are going to go, signing up for things to help them lose weight to start the year. You have to think Weight Watchers is one of those that are going to benefit. I've talked about this before, the fact that the Michigan Blue Cross Blue Shield sent out a notice saying that in order to get prescribed for some of these weight loss drugs, you need to be on some kind of program for 3 months. They actually cite Weight Watchers as one of those programs on the brochure. Have to think that's the start of some kind of domino where all these other insurers are going to kind of get on board with that. Once that happens, it's just going to, Weight Watchers not going to have to advertise themselves anymore. And it's an iconic national brand. People know about it, but I think it's just going to bring folks back into that system. And then you have the CEO, which she's shown that she's able to build a online community. She did it before, which she did House Party, which got sold to whatever that gaming company was. So she knows what she has to do. And I think they're kind of in the late stages of building that out. And then once that really starts to get momentum into the start of this year, 2024, I think it trades 15, 20, and then maybe it starts to squeeze 25, 30, 35. That's why I have later dated strikes, because I think that at some point that's going to happen. I was not bad with the analogy, and UPB was on here talking about it too, but with GameStop, it's not the best analogy, but back before the squeeze in the fall, I was talking about the short interest. The company traded less than one-time revenues. They had a huge scale. You had Ryan Cohen come on the board, or come on with an insider stake, and then they were able to transform this archaic, dying brand into something that, hey, maybe it's on the cusp of a turnaround. I'm not saying it's the same here with Weight Watchers, because I don't really think it's a dying brand. The issue is they have a lot of debt. So when I think it's $1.4 billion in debt, but a lot of that's further out, 2028, 2029. But I think there's an opportunity for it to really take off once they start be able to pay down some of the debt, or get, the stock goes up and they can do an offering, then I think it really starts to take off. So I think that's it, folks. I think I lost my voice. Thanks for listening. I'll have this is recorded, so it'll be on the blog within 20 minutes or so. Anyway, hope everybody had a great Thanksgiving. Have a great weekend. I'll try and get on audio Monday or so, but I'm going to try and have a list of at least 10 stocks that I think are going to outperform it to the end of the year. And then right at the end of the year, I'll have my top 5 stocks for 2024. Let's have a great day. Rock and roll.